Hello, everyone. On today's episode, Mike and I do a deep dive into the workers' comp experience mod. If there's one major takeaway from this episode, it's that your mod is more than just a number. It's a reflection of your safety culture that can either save you thousands or even shut you out of major contracts. Today, we break down how the 3-year calculation impacts your current budget, auditing your worksheet for clerical errors and missing payroll, and the impact of claim reserves and how to manage them before they stick. Hit subscribe and join us for this masterclass in insurance mechanics. All right, enjoy the show. All right. Welcome to Falcon Forward. My name is Peter Brecht. I'm here with our president and our co-host, Mike Tanghe. I'm excited. Today, our podcast turns 21 episodes, so it can legally go out and hang with the rugby players after the game here, Mike.
Right.
Anyways, how's your day going? I'm excited to talk and kind of keep this thing going. It's been talking before the show. It's been a learning experience, kind of seeing what resonates, what people listen to, what they like, what they don't like. And there's a lot of stories in the numbers, so excited to talk today too.
Yeah, very interesting. Fun that it's the 21st episode. I hadn't caught that, even though that's the heading at the top. So, yeah, exciting news in our life is next week, my daughter, who turns 21 in July,
Right.
will be back for the summer. So,
Yeah.
different ways to celebrate 21. We'll keep this podcast on the more professional.
100%. I think my first birthday, I had a single beer, I had a sip of wine, decided I didn't like either one of them, and then I had some fondue. It was great. So it was quite the rager, as the kids say. But today we're talking about things that are, I think, equally interesting, at least for me, and kind of get into some details here on let me pull up my show notes. But so basically work comp, the experience mod factor, and going through sort of that more in detail. So if you are new to the insurance industry, you are considering the insurance industry, you want to know what goes on behind the scenes, you want to know how your commercial insurance kind of plays into that as a client, we're going to talk about some of that today. So while you might, this is probably more of a, we're sitting here with Mike. He's got a lot of knowledge. He's got a lot of history here in the industry, and excited to learn. So, Mike, I'll let you kind of kick things off and get us into our details here.
Yeah, awesome. And again, just echoing what Peter had said is we've set out to do these podcasts for our internal team, but we also want to share that knowledge with people going through our academy or just those in the industry as well. What we'll run through today is more of a California specific topic because, as most people know, each state has its own Department of Insurance and has its own rules that they create for the insurance companies to follow. And today's topic, which is your workers' comp experience mod, just as it sounds, it's governed by that particular state on how they do it. So we can jump in and start geeking out on insurance, if that sounds good, Peter.
Let's do it. And then just in case you are listening to this on Spotify, Apple Podcasts, I will make sure that there are links to an article on our website. If you'd like to read through this and kind of pay attention like that, there's different ways to kind of go through this. So don't feel like you have to take notes. We're going to, produce that for you here at the end.
Yeah. All right. So first question is, what's an experience mod? What is this thing that every business of a certain size or number of years in business gets assigned this factor? Mods can get as low as, the 0.6 on it. And then I've seen mods in excess of 2.5. And, what that means is every insurance company that writes business in a particular state will assign class codes to those employees and their based upon their job duties and what they're doing. What those insurance companies do then, and every insurance company does this, reports that information to the state. And the state then takes all this information in and figures out what's an average amount of claims. And so the insurance company reports both the payrolls associated with those class codes and then also the claims that they have for those class codes on a per employer basis. And the state takes all that information and then figures out what's a baseline. That's the 1.0. So if you're a particular employer in that state with that particular job code, and then the payroll that you have for that, the insurance company figures out, okay, how many claims should these people have? And that becomes the baseline. And then depending on your actual experience, so how did your business do against the baseline? You're either going to have this credit. Again, that could be as much as 40%, or you could have a debit, which could be as much as 250%. Probably even goes higher than that, but I would think it would be very difficult to continue on in business if you're higher than a 2.5 factor on that. So,
And
and yeah, go ahead.
yeah, just a quick note on that. So, for producers that are listening, and not to cut Mike off, but this is a number that we pay attention to. So we use a number of sources, for example, right? We'll go through and you'll see potential clients, and a lot of this stuff gets reported on a state level, and there's ways to kind of look at what a company's X mod rating is. And you'll see, like in some of our higher risk industries, for example, concrete reinforcement, right? Where there's a higher level of risk and maybe more claims been filed, you'll see that being a higher number typically. And there's others that we'll see that are lower. And it's not always industry based, but it is something that we pay attention to and we're looking at, not necessarily focusing on it, but it is something that comes up as we're looking at businesses or having conversations with people even, and especially like HR that's very familiar with that. They'll be paying attention to that number because they know it's a factor. Maybe they don't know where it goes or why it matters, but that's sort of what we're here to kind of talk about in detail.
Exactly. And to your point, it does get used a lot of different ways. So it's not just adjusting your costs. And you think about it, if you're a business that's paying 100 grand in work comp premiums and you got a point 0.6 mod, you're looking at a 40K savings versus someone with a 2.5 mod is going to be paying 250 grand for their work comp on it. So massive swings on it, especially for businesses that, factor in their cost when they're doing bids for jobs. It also plays in though, so there's government contracts, there's general contractors that will specify like your mod must be lower than this amount because they don't want risky people or riskier businesses on their job sites and potentially getting their people injured as well. So high mods can shut you out of opportunities as well as making it more costly just to run your business.
Now, real quick on that. So, I mean, you have the mod follows the business. It's not going to follow the person that's running it. Like, how does that, like, let's say I have a construction company and for some reason just I'm not good at managing it, right? So I'm like, okay, I'm going to shut this down. Sort of like the Michael Scott Paper Company, right? He's like, I have an infinite number of ideas for my next business, right? But I start a new one. I have to start out somewhere, and maybe we need to go back to like when the business starts because there's a certain amount of growth, but like it follows the company, it doesn't follow the person. So I think that's kind of interesting, as well, because again, I could start another company. It doesn't mean I necessarily know what I'm doing, and a reputation follows you, I guess, too.
Yep. And so there's, as you can just imagine, if something that can have a huge cost on companies, then there's ways that people will try and game the system of not reporting claims, of deeming people independent contractors and not employees, paying cash for injuries, starting up new companies. If you're company A and you have a really bad mod, well, let's start company B and hire all the same people and hire all the same things. So with each of those things, there are rules that will kind of go after that and pursue those people so that if someone is trying to game the system, that'll catch up with them. And it's certain things like when you set up a new company, or if you have ownership in multiple companies, that those mods will be shared on it. But yeah, there's ways that, trust, like people have thought of it, and then there's rules that prevent all the things that they're thinking of. But it's a conversation that we'll have with people, or not often, but where someone who isn't really getting hurt by it and sees how bad it is, they'll say, well, I'll just start something. And you can counsel them on, hey, here's what's going to happen to you. And you can't, the point is you can't run away from a bad mod.
Right, and you're better off figuring out how to manage it better through other things, right? So
Yep.
definitely comes up infrequently, but it does happen. Especially, and again, going back to high risk, it's like it's something that we are constantly monitoring and looking at. So, all right,
Yep.
sorry, I didn't mean to cut you up. It's hard to know when I should ask questions because I have so many of them. So I'm trying to write them down and then ask them at the right time. But I'll let you go back to the questions we had kind of thought about ahead of time.
No, perfect. And please ask questions anytime because it's helpful to clarify and helpful to kind of dig in on some of the things that may be a little bit more, either I'm not explaining it well or just it's
A little more
we're
nuanced.
diving into. Exactly.
Yeah.
So again, what is an experience mod? It's that baseline of how you compare to all your peers. And then the big thing though is how does it impact you? So let's say your work comp renewal is on 1/1/2026. So January 1st on it. The carrier is going to take your experience from the three most completed years when they calculate your mod. So that mod that's effective January 1st, 2026 is going to get calculated midway through 2025. And again, they're going to look at your 3 most completed years. So that mod that's effective for your 1/1/26 renewal is actually going to be your 2024, 2023, and 2022 experience. So it's those 3-year periods. So if you have no claims for a number of years and then you have a bad claim, or worse, have lots of medium-sized claims, you know that that mod is now going to stick with you for a 3-year period. And the idea of having it be 3 years is that you're not going to see these massive spike ups from, zero point 0.6 to 2.0 back to zero point 0.6. If you have one bad claim, it may take your, zero point 0.7 type mod up to a 9.5 or a 1.0, where it will stay for 3 years, but that's better than seeing it go all the way up to a 1.5 or 1.7. So first thing you got to do is you got to get the experience mod worksheet. So that's something that's generated by the state. The way we do it is we ask our work comp carriers to provide it, because the state will charge us for giving us those things. So again, as independent agency owners looking to keep our costs low, if the carrier already has it, they've already paid for it, let's just get it from the carrier and not have to necessarily pay out of with our agency to get that. That doesn't run afoul of any rules. It's not a proprietary information or anything like that. So if it's an existing client, just get the mod from the existing work comp carrier. And then the next piece of information, and this is something that's generated every year for them. So figure out what date that is. It's usually 5 months before a policy renews is when things get generated, but can vary kind of state by state. But figure out when your mod renews, get that mod worksheet, and then get the loss runs as of the date that the mod worksheet was calculated. So that gives you your first kind of bits of information. And then what are you going to look for on this? So it's a formula, right? It's something that relies on data being inputted in and then spits out a mod. So the purpose of what we want to do next is make sure that all that data that goes in is actually good. It's accurate. And because obviously if something is inaccurate, then you have a client that's potentially paying too much for their insurance in the form of an inaccurate mod. So pause there. Any questions so far on what we're looking at first?
I'm tracking only because I've gone through this before. I'm trying to think if there's anything that would come up for someone listening for the first time, but for nothing there. So if you do have questions that Mike and I aren't answering here, leave them in the comments, send us an email. We look at all that stuff and we want to make sure that we keep building out these things here. So anyways, yeah, we're good, Mike. Keep going and we'll
Yep,
keep going. But yeah.
perfect. And actually, what your pre-mod auditing is figuring out when your mod is actually calculated. And then before that period is happening, looking at your loss runs. And we actually did a podcast a few weeks back that was fairly well viewed. I think one of the more successful ones about how do claim reserves impact your premiums. So it's important that, and we go into very deep detail, which we won't repeat here, on how to get claims that are open and reserved, how to get those closed quicker. You want to have any open claims resolved, closed, or at least reserves bumped down as much as possible prior to the mod getting calculated. Because once that mod's calculated for the year, there are ways that can get changed, but only if there's been errors. So if an open claim, let's say that again, that 2026 mod for that company has a claim from 2024 or 23 or 22 that's still open, if that later gets closed in a lower amount, they're not going to revise the mod. Only if there's an error will a mod get revised. So it's important even before you start this process to go through what we talked about in that prior podcast about looking at your claims reserves, getting any open claims down before you're actually doing the auditing of that worksheet. So go ahead.
No, you're good. I was thinking about other claims and like other lines of business if they would ever relate to workers' comp, but that's not quite the time to ask the question yet and might not be relevant.
Yep, and there is a slight tie into that, but we'll cover that in a little bit, because that is one of the ways that you can get these worksheets redone. Is if workers' comp is always going to pay first, but let's say the work comp carrier was able to subrogate against an at-fault auto, like one of your employees got rear-ended in a car accident, work comp insurer is going to pay. If it's a real messy claim that is taking a very long time to resolve, if that work comp carrier does subrogate against that at-fault auto insurer, that is one of the reasons where we can go back to the bureau that calculated the mod and say, hey, you had this one reserved at X amount. Our carrier was able to subrogate it, and then now we want you to revise that mod worksheet. So you do bring up a good point that, yeah, for sure, it can be another claim in a messy situation, which oftentimes bigger work comp claims are messy to get things resolved. All right. So you got your experience mod worksheet, you got your loss runs, and then now you want to go through and just check stuff. And from a real basic level, you're going to check, these are calculated on 3 years, right? Are all 3 years there? Sometimes there's a year missing. Sometimes there's a year that it was added, especially if someone had changed their the renewal date of that policy. It can cause for some funky periods. If a carrier is operating in multiple states, sometimes they don't necessarily report all the states. So you have to have a good understanding of what payrolls a company has. And are all those payrolls reflected for all 3 years? Because that becomes kind of the pool of stuff. And if it's too small, if data is incomplete on what is actually being reported and you have losses, then just think that loss is going to have a much bigger effect than if we had all years, all payroll will effectively soften any losses that are reported during that period. So that's step one.
Real quick on the work comp. So that worksheet, you hear worksheet, and I immediately am taken back to high school where it was homework. But it's really, it's obviously this is a business thing that we're looking at. Is it the insured that's filling out this worksheet? Is it the insurance broker? Is it the carrier? Like, how do we get that information on the initial, at least on the initial time through?
Yep. So this is all communication between the insurance carrier and the bureau that's collecting it. So brokers have in fact, we can't call up and be like, hey,
Yeah.
can you bump this one out?
Right.
If we do notice errors, we have to contact the insurance company that was the cause of the error and have them send an updated, and it's called like a unit stat card, I think is the name of it, that gets reported from the insurance companies. Have departments effectively, or at least some people in these departments that report directly to the bureau that calculates that stuff. But yeah,
And
great question.
okay. And to clarify, brokers don't see that. We still see it, but we can't adjust it. The insured still sees it, but we can't adjust it, right? So because you have to know
Correct.
how
So
how it comes out. Yeah.
the worksheet or is what we're getting is basically here's the formula and here's all the data that goes into that. So we do see everything on it. And again, this is the sheet that we're looking at to say, hey, is this accurate? So we'll know if it was our client, what the payrolls have been, what states they operate in, what years they've operated in. That's what we're looking for is do they have all that information? Or if they had, again, companies that are doing are they reporting the stuff that we want to have reported if they've acquired someone and assume their experience? So there's all these kind of different things that sounds fairly easy. Well, hey, 3 years, all that stuff. But if it's a company that's doing a lot of changes, you can have these differences.
So for everyone listening, unless you work for the bureau or you work for the carrier, I have relief. This worksheet is less of a worksheet and more something to review. I
Exactly.
think that's important to note.
Yep. Yeah. There's no work. Actually, I take that back. The whole point of this episode is the work that we have to do to make sure that's accurate.
Right. Correct. Yeah. But there's nothing we're inputting or et cetera, right? We're sort of
Correct.
verifying and confirming.
Yep. So we've verified the years are correct. We've verified the payrolls that are reported are correct. Then we're looking at what are the claims that are reported for that particular customer. And again, does it track with when they created that, or when the snapshot in time when this mod was generated, do the loss runs at that time reflect? And it's quite common that loss runs they're incorrect, or just imagine all this data that goes back and forth and it's manual, that mistakes will happen. And so our claims reserve there, or claims that are open, are the reserves accurate? And then each state, and this is where it gets really funky, is each state has their own formulas. So like in Minnesota, where I'm originally from, if it's a medical only claim, then only 30% of what was paid gets reported to the bureau on it,
Interesting.
and 70% doesn't get paid. If it's a medical claim and then the person misses time off of work, which becomes an indemnity claim, meaning they're paying for time off, now 100% of both the medical and the time off get reported. So you got to look at this. Is it a medical claim or indemnity claim? California does it even a little bit different from that, in that they just decide $250 is our threshold. So every single claim that gets filed for workers' comp, state of California, the Bureau does not count the first $250 of that claim on it. So, and the
Seems
idea
like a
there,
very small number.
very small number,
Yeah.
that's one visit to the ER urgent care that gets you kind of, hey, quick, you're good.
Right. That's just
Uh,
walking in the door.
Anything above that, they're ordering lab tests, blood work. You anyway do that. So yeah, so California, but if you imagine if you have a business that has a whole bunch of, like we worked with a dog kennel that had a lot of bites, and everyone who got bit went to the urgent care, got, bandaged up, the wound cleaned, and with that threshold, none of those claims were impacting their mod because they all were coming under that $250 threshold. So you just something you want to, if you have 20 small claims and they're all, 250, 250, 250, that person's going to have a great looking mod on it because it's not going to count against it. So, yep. So you want to look at that or whatever that particular state you're in, how they do it. Uh, the other piece is, okay, so let's say it's a bad claim. It's much better to have one bad claim than it is to have lots of medium claims, even if in some, the medium ones don't add up to the bad claim. And the reason being is states will apply a max threshold of how much a claim will count against you. Again, it varies by state, but if you effectively like a $10 million loss would count the same as a $500,000 loss in calculating an employer's mod because of how the state caps work on that. So again, you want to look at that particular claim on the loss runs. Did it exceed the carrier's threshold? And make sure that, again, that formula is also applied. And so let me think if there's any other, those would be the biggest things that you're looking at on the ModWise. So are the payrolls accurate? Are the years accurate? And then are the claim reserves or close calculations, are they all accurate? All right. So, okay, you found some inaccuracies. If it's in actual error, then you can go back to that insurance carrier and say, hey, I look at the mod here. This is wrong. Can you please send in these new unit stat cards or corrected unit stat cards? They'll send it in. Then it's set in a follow up, make sure that the Bureau receives that, and then make sure the Bureau reruns the mod.
What are some of the more common clerical errors that you've seen on these throughout the years? I mean, is there? I'm sure it's hard to pinpoint and say like it's they're always missing this exact thing, but are there, I don't know, three things that maybe you're most commonly coming across?
So I wouldn't necessarily most common, but for sure there's missing payroll, missing years, and especially when there's multiple entities involved with a company or there's been acquisitions on stuff. But can also be that if they just have the wrong data in there, and I've seen stuff as bizarre as if you have a similar sounding business where it's like, hey, this isn't even our company, like we don't have operations in this state, we don't have this type of thing, or because will list all the entities that are associated with the business. So yeah, so it's commonly that will not common, but you'll see these errors of, hey, this wasn't our business, or we sold this location 5 years ago and the new owner has run it into the ground, but that should no longer be on our mod. So it can come from a variety of ways, but it's effectively, it's if there's bad data coming in, then it's going to generate something incorrect. And those are all things that they'll redo the mod for. And then we talked a little bit about subrogation. That can be a big thing too, of, hey, they were successful in going after this at-fault driver. So just being aware of the type of claims that your clients are having and then monitoring that to make sure it's not impacting your mod are all things that you should be doing. So,
Okay, understood. Thanks for clarifying that.
and then let's say claims do get changed mid-year, but you've missed your period for that year. Then that's getting set up in your follow-up for the following mod year to make sure that, hey, loss runs are accurate. So the claim that got resolved, loss runs have been resolved. Make sure that for next year's mod that they are using the correct information. So this is almost like an ongoing project that you got to redo every year for your clients to make sure that things are accurate.
Gotcha. Yeah, always reviewing the work comp. I think it's my favorite coverage to like really tear apart. I mean, we just got done with a renewal, and I mean, I spent probably more time than I needed to on it, to be honest with you, but it was just so fun to like get into exactly what was happening, how everything got moved. This is a massive multi-state client, but it's fun to dig into that and kind of understand how everything kind of breaks out. It's very, I think Bill Leversey told me, he's like, it's the most vanilla coverage you'll ever come across, but there's so much if you want there to be, right? And kind of figuring how it's done. So
Yeah.
it's a great thing to review. And obviously as someone who was an employer in the past, right, and had, we had 200 employees, you realize work comp is, I mean, it's people actually, I hate, this is crazy, but it's like depending on how you run your company and your work comp and how all that kind of goes, like people will either work for you or they won't. It actually becomes and it's an employment thing too.
Yeah. I mean, it's and some of my best work comp clients have been newer businesses. So companies that kind of start, and when you think you're starting out, you're not eligible for a lot, right? It takes a few years and hitting a certain premium threshold on it. But growing as a company, having some losses occur, and then getting their renewals and being like, holy cow, like I paid X amount this year, I was budgeting Y amount, and I'm 2 or 3x that. And it's painful for them, but it forces them to be like, hey, I got to get a hold of this or get a handle on
Yeah,
this,
manage it. Yeah.
and I want to understand it, and I understand what levers can I do to do it, and I want to make sure that I'm never in this position again. And again, I can think of two businesses that, uniquely enough, we wrote on the same day, and it was it was like a mid-December day. Was both their effective dates, and they're two very different businesses. One was a senior living facility, the other was a doggy daycare. So I guess they both took care of
Yeah.
their pets,
Other. Yeah.
but they both were really growing businesses. Both got really hurt by work comp experience mod, and then became two of our better clients as it related to managing their mod, taking care of their employees, limiting injuries, and then really being a success story for the insurance company. And hey, here we were able to take these people on, work with them, and then partner with them for the long term.
And that's the goal as a broker myself. It's like I want to know this well enough and then help our businesses that we work with to succeed and do better, right? I want them to hit all the metrics the right way, and give them ideas if I'm able to.
Yeah. Yeah. So that's all I got for you, Peter. If anyone is watching this and has their own things that they like to look for or other suggestions on things that we should be thinking of too, that would be helpful. It's just one of those things that every client's a little bit different. Another thing I like to do is I recreate, you mentioned the worksheet, and probably now with using Gemini or Claude, you could do it easier than that. But I created my own worksheet or spreadsheet that just, and they, on the work comp experience mod worksheets, it has all the formulas and what everything means. And just by recreating that in an Excel spreadsheet, I model then my own mod of like, this is wrong, or next year, if this falls out, and that way you can give your client a better approximation of what their future mod would be. Or if you've caught the corrections, you don't necessarily have to wait for the bureau to recalculate it if you can do all that on your own. That's something that I found helpful to have too.
Absolutely. I mean, that's sort of what I did too. Is we have our proposal and then tearing that apart and then looking at each state, how that worked out for each one is kind of a big deal. I had two questions, things I noted because I've come across this. We'll have a client or prospect, for example, they'll have a low mod, right? So let's say they're 0.6. But then you see a debit on there and they've been with a carrier for 10, 15 years. It feels like they're kind of washing the mod away, right? When you add a debit, or like maybe I'm not understanding that mechanism properly, but we've come across that before. What is that scenario and why does it happen?
Yeah, and it's just a carrier. So again, a mod is fixed by the state. The state assigns it, and so carriers may put on a debit mod if they feel that. And where we more commonly see it is, let's say they have a really bad year that current year, but remember that their mod won't be impacted until 2 years down the road on it. So when that, let's say you have real bad year claims in 2025 and you were clean up until that point, so 22, 23, 24, zero claims. 25 is a really bad year, you have a whole bunch of claims. Your 2026 mod is going to be like a point whatever 7 or whatever that number is. But at the same time, the carrier's like, holy cow, you guys had 10 claims last year.
Yeah, yeah.
We need
Okay.
to put on a debit here so we can collect enough premium to model your account going forward based upon this kind of before they get hit by the mod. But let's say that same client learns their lesson, makes some changes, and has better success going forward. Next year, that mod's going to hit them. I would argue to the carrier then, hey, this debit should come off on it. Or if they have another bad year and it stays on, but carriers will use a debit as discretionary pricing, and they will also provide schedule credits for the right account too.
Yeah.
That's a question that if a carrier has that on there, then the question is why. And if it's not warranted by, and work comp is like in really any line of business is pretty easy, is what are expected claims? What's premium? And then the carrier obviously has to cover all their overhead in admin and make a profit.
Of course. Okay.
And a debit is just used to adjust premiums to make sure that's in line. But if it's not warranted and the carrier can't justify it, then that debit should be off.
And we briefly touched on this, but we're looking at the work comp mod and closing out those claims, and trying to get that handled. If, let's say, we have a client that has, so there's a claim on the general liability or professional liability or D&O or something like that. Do any of those losses impact the work comp, or in what situations would we need to pay attention to those, or is that not relevant here?
You would only if it relates to like a subrogation type claim.
Okay. So it goes back to subrogation. Oh, perfect. Easy answer there. And yeah, that's really all I had kind of taken notes on the side, just as things I'm curious about. So great. Well, I think we'll wrap it up here. We're hitting the 30-minute mark, and hopefully if you're listening to this, you're not falling asleep or anything. I love this stuff personally. I know Mike does as well, just kind of getting into the weeds on it. And so anyways, thank you guys for listening. Again, we are really focused on, I think for probably better for me and Mike that we're saying, hey, go listen to us in the audio format on Spotify and Apple Podcasts. But those are two great mediums. We want to stay in touch on that. And then we'll have this up on our website too, with all the written notes and things too. So thank you guys for being here. Thank you, Mike, for taking time out of your day. And we'll be back again next week with another deep dive into something new. So thank you all.
Thanks, Peter.
Falcon Forward does not provide financial or insurance advice. The following disclosure is available at falconwest.com/privacy-policy. All information provided is for educational and entertainment purposes only. We encourage you to do your own research and consult with qualified professionals regarding your specific needs. If you have specific questions about your property and casualty insurance, our contact information can be found at falconwest.com. This content expresses the views of Falcon West Insurance Brokers, Inc. as of the date indicated, and such views are subject to change without notice. Falcon West has no duty or obligation to update the information contained herein. Further, Falcon West makes no representation, and it should not be assumed that past insurance market conditions, coverage terms, or pricing are an indication of future results. This information is being made available for educational purposes only and should not be used as a substitute for insurance advice tailored to your specific circumstances. The information contained herein does not constitute and should not be construed as an offering of insurance coverage, a guarantee of coverage terms, or a binding quote in any jurisdiction. Certain information contained herein concerning insurance markets, industry trends, and risk performance is based on or derived from information provided by independent third-party sources. Falcon West Insurance Brokers, Inc. believes that the sources from which such information has been obtained are reliable. However, it cannot guarantee the accuracy of such information and has not independently verified the accuracy or completeness of such information or the assumptions on which information is based. This content, including the information contained herein, may not be copied, reproduced, republished, or posted in whole or in part in any form without the prior written consent of Falcon West Insurance Brokers, Inc. To obtain our property and casualty license information, please visit falconwest.com. Our California license number is 0616640.